By the end of last week, the NSE was up at least 2 basis points on Friday, ending the day on 24,444. Has it been a good day today?
No, it hasn't been a particularly good day. The index declined about 0.08% today, closing at about 24,420. In the same vein, the market capitalization was down about 0.09%, closing at about 7 trillion. So it hasn't been a particularly good day, and this is just reflective of the current trends in the market.
I mean, obviously what we're seeing internationally, a bit of subdued trade. It's the end of the year, investors covering their positions. What we saw in Nigeria is that the bears were out to play, particularly in the banking subsector, which constitutes the majority of the NSE, profit-taking, low prices for banking stocks. What's the situation now?
Well, I mean, as we know, the banking sector sort of trends the performance on the market, and so it's a good indication as to what is happening in the market. We think that what has happened so far this year has been largely due to the issues facing the banking sector. We've seen some positive results and some positive performance relating to AMCON and other efforts that the central bank is making to improve the situation in the banking sector. So we think that going forward, the recovery in the banking sector is going to be key to recovery in the market, and we think that investors remain cautious in that respect.
Okay, well, they should get some respite with regards to review and regulations that are being introduced within the pension sector, approved investments to include infrastructure bonds and other new bond asset classes. What's your view?
Well, I think this is exciting news for the market, particularly for the bond sector. I'll just come back to that, but I also want to mention that one of the new rules it has increased the percentage that PFAs can invest in equities, for example. So we think that is good for the equities market. But particularly, we've seen the introduction of supranational bonds, infrastructure bonds, and other asset classes like private equity and other fixed income asset classes as allowable investments for PFAs. So we think that it's very good if you take the size of the pension assets under pension industry assets under management at about 2 trillion, and you look at the provision that says about 15% can be invested in infrastructure bonds. That is potentially 300 billion hitting the local bond market. So we think it's very good for the market going forward.
Okay, so obviously the pension funds can help to drive up liquidity in the market, as you're saying, an industry at 2 trillion naira, 11 billion US dollars. The one issue, though, that is outstanding, it seems, is whether or not Nigerian pension funds can be investors abroad. That's been a really thorny issue. How's that been dealt with in terms of the new regulations?
Well, I think the new regulations provide that for supranational bonds, for example, bonds issued by DFIs that are not particularly Nigerian institutions, once those securities are approved by the local authorities and are issued locally, then PFAs can invest in such instruments. And I think that that is just to protect the pension assets. That's how it has been addressed so far. We think that going forward, the PENCOM has showed very good faith, very good spirit, if I may use that word, in terms of constantly revising the regulations. So we may get to the point where it may allow offshore investments for securities that are not particularly classified as local instruments.